The SCHD ETF has been my all-time favorite buy and hold ETF for a long time now. And considering I buy on average around 2 to 3 shares on a daily basis, as you see right here, I have built up quite a sizable position as of right now of over 500 shares as I film in this video. But as time goes on, I'm always open to changing into maybe another high quality ETF if there's something that feels as if it's going to get the job done better than what SCHD has been able to do. Now in this video, we are going to talk about a newer ETF that I recently came across and why, at least in some ways for certain, it is much better than that of SCHD. But the great part is that it also still offers a lot of what SCHD offers, which is awesome. Now if you happen to own any shares of SCHD or plan on it, please watch this entire video before you buy another single share. Before we get into today's video, make sure to please go to the first link in my description and grab my brand new dividend investing ebook and dividend tracker bundle. I promise you guys are going to find tons of value in both. Now just to give some context in case some of you aren't aware what the SCHD ETF really even is or how it works, SCHD is the Schwab US Dividend Equity ETF, and it's known as one of the best high-quality dividend growth ETFs across the entire market, and is definitely very, very popular. Now this ETF's objective is pretty simple. It's to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. SCHD is also great because it has a very cheap expense ratio, which is going to be important to remember later on in this video, of just 0.06%, so this ETF is basically pretty close to free to hold on to. But generally speaking, here's the deal: SCHD is pretty popular because this ETF tracks a high quality basket of holdings, is very well diversified, has been paying dividends for years, and raising their dividends also, which we're going to see here later, but on top of that is also appreciated more and more over time. So a lot of you watching this might be thinking to yourself, well, this ETF sounds honestly pretty close to perfect, especially for those investors out there that are sort of dividend focused and really care about growth and dividends equally. But the ETF that I think might give SCHD a run for its money, at least in some regards, is DGRW, or the Wisdom Tree US Quality Dividend Growth Fund. Now here on the Wisdom Tree website, it says Wisdom Tree US Quality Growth Fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the U.S. equity markets. It also says why DGRW: gain access to the current investment landscape of U.S. large-cap dividend-growing companies by applying quality and growth screens, and also use as a complement to high-yielding dividend strategies, or as replacement for large-cap quality growth strategies. Now, first things first, just to get this out of the way, there are a few major differences when it comes to DGRW and SCHD. The first main one being that DGRW's expense ratio is very high compared to that of SCHD at 0.28%. So more or less, it's about 4 or 5 times more expensive to hold on to DGRW compared to that of SCHD. But just 1 second, you might be willing to pay that extra small cost when you see what this ETF has to offer. The other main difference, which I know a lot of you dividend-focused investors are going to love this difference, is the fact that DGRW pays a dividend on a monthly frequency. So you're not going to have to wait around 90 days to get paid like that of SCHD. DGRW is going to pay you on a monthly basis, which is awesome. Now, if you look at DGRW's overall growth on the chart, over the past 10 or so years, it looks very similar to that of SCHD. And don't worry, later on we are going to be stacking up both these head to head and see which one has performed better over the long term, so just stick around for that. But the main reason, especially for me being a long-term dividend growth investor that is looking to buy into ETFs, to not buy for a year, not 2 years, not 5 years, I'm looking to buy into certain parts of my portfolio and hold on to these names forever. And I'm being completely serious when I say that. The shares that I have right now of SCHD in my portfolio, around 500 or so shares, I'm truthfully looking to hold on to these shares forever. There are some holdings in my portfolio, of course, that I'm not looking to hold on to forever. I buy and sell names out of my portfolio on a monthly basis. But that being said, for certain names, I'm looking to buy and hold forever, and DGRW is one of them. So now that you have that context, look at the main reason right here on why I think this ETF could be better than SCHD. This right here is the holding breakdown. Now, the majority of DGRW is going to be made up of technology, which I love, especially because technology is higher beta, which means when the market does good, it's going to grow more most likely, and which means it's going to make investors very rich, most likely over the long term. The next biggest position is consumer defensive, which I'm also a fan of. Then we have some industrials, healthcare, and then financials. Then the rest of this ETF is made up of things like consumer cyclical, basic material, real estate, energy, utility, and communications. But look at the top 10 holdings within this ETF. We're talking Microsoft, almost 10% of this ETF, Apple, 6%, Broadcom, 4%. Then we have 3% of Johnson & Johnson, 2% of Procter & Gamble, then a little bit of Home Depot, Coca-Cola, Merck, Philip Morris, Cisco. And all in all, I'm also a huge fan of the fact that there's almost 300 different holdings within this ETF, which means it's much more diversified than that of SCHD, which only has around 100 different holdings. Now heading back over to SCHD just to compare the two, there are some very high quality top 10 holdings within the ETF. We do have names like Broadcom, Verizon, Amgen, and some of the names within this list are obviously more favorable than others. But if we were to be completely real here, if you were a betting person and you wanted to bet long term on these top 10 names, and keep in mind these top 10 names are most likely going to change around over time during reweighting, reconstitutions, etc. But if you were to compare the top 10 holdings in SCHD, compare the top 10 holdings of that of DGRW, you cannot tell me for certain that these names are not most likely going to outperform that of the holding breakdowns within SCHD over the next, say, 10, 20, or 30 years. Now, one thing to maybe be concerned about is the fact that DGRW does have a pretty high concentration in tech names, which once again, like I mentioned earlier, is going to have a higher beta, which means this ETF, DGRW that is, might see a little bit more volatility over the years. But once again, the top 10 holdings within this ETF, as well as some of the other holdings deeper into it, are very, very high quality. Some of the best companies in the world. And even though I own way more SCHD, and even though I'm a huge fan, I have to be honest here and say that maybe, just maybe, the names in DGRW are a little bit better. Now, as far as DGRW's dividend goes, we're looking at a much lower starting dividend yield, around 1.8%. So I guess that is one of the negatives if you are more of a dividend income focused investor. But regardless, over time, just like that of SCHD, DGRW has been paying more and more in dividends consistently, and DGRW does have some very healthy dividend growth. Year over year, the last few years, around 10 or so %. But now, last but not least, I wanted to stack up DGRW next to SCHD over the longest time frame and see which of these ETFs has actually returned more cash to investors if they would have invested $10,000 at the same exact time. So for this simple example, we have a start date of 5/22/2013, and this is an example of $10,000 invested into both of them. Now, to cut right to the chase, a $10,000 investment would have seen a 203% return in that of SCHD and a 240% return of that in DGRW. Or annualized out, we're looking at an 11.07% return from SCHD and 12.3% return from DGRW. Now, of course, throughout different time frames, both these ETFs have performed pretty good, and pretty much up until the last year or so, these have both been pretty much neck and neck. And the reality is that both these ETFs, in my opinion, are super high quality options for long-term dividend growth investors that are not only seeking dividends along the way, but also some serious capital appreciation potential. But it does beg the question when you do stack up names like SCHD and DGRW that both offer similar things. They both offer a super high quality basket of holdings that have not only paid dividends, but also raised their dividends consistently. And for me moving forward, I most likely will continue to keep stacking up shares of SCHD, the Schwab US Dividend Equity ETF, for a little bit longer, maybe until I reach around 1,000 shares, and then likely I will switch over and start grabbing more and more shares of DGRW from there. But now I want to hear from you guys down below. If we were to compare DGRW next to SCHD, the Schwab US Dividend Equity ETF, and if for whatever reason you could only buy one of these ETFs, which of these ETFs would you personally buy on a daily basis? Would it be SCHD or would it be DGRW? Comment down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.